Hi, this is Ben Parojcic with ReMax Above and Beyond, and welcome to your Real Estate Market Minute. Well, today I want to answer the question, how do I go about improving my credit? How do I go about getting credit like a Rockefeller so I could buy the house of my dreams? There's some things that people think affect their credit that really don't. So a couple of these myths are basically income. Some people think, well, I don't make enough money, so my credit is bad. Well, your income doesn't have anything to do with your credit score. You can have a very modest income and a great credit score. You can have a really high income and a terrible credit score. It matters if you pay your bills. Net worth. Net worth does not affect your credit score. You could be a millionaire and have terrible credit. You can, again, have very modest assets and have great credit because you pay your bills on time. So net worth just doesn't come into play. Education level, has nothing to do with your credit. You could be a PhD with terrible credit and a high school dropout with great credit. A lot of people seem to think that using their debit card improves their credit. It doesn't. Debit card does not get reported to the credit bureau. So that just has no effect whatsoever. So the main things are basically payment history. So the best tip I can give you to improve your credit score is pay your bills on time. How's that for a tip? Pay your bills on time. That's very important. The other thing, though, is lower your credit utilization. You really want to be at about 30% of your credit limit on a credit card. In other words, your balance should be about 30% of the credit limit. So if your bank credit card credit limit's $10,000, try to keep your balance around $3,000. That's a big credit score improvement technique, is to bring those balances down within a 30% threshold. Another way to do that, which I like, is simply calling the credit card company and saying, hey, could you increase my balance? And that way, or increase my limit, that way try to bring your balance down within that 30% threshold. That's kind of a neat trick. The next thing is trying to get your rent and utilities put on your credit card. A lot of people are maybe not so diligent in paying their credit cards because there's entertainment on there, restaurants, cell phones. They're not terribly diligent about that. But really, they're very diligent about paying their rent and utilities, but rent and utilities really don't go on the credit card unless you make it a point to put it on there. So if you're maybe a little credit challenged, but you're paying your rent on time, there's a company called Boom. And for only like $3 to $5 a month, they work with you to put your perfect, awesome rent payment history on your credit card. And that instantly will raise your credit score. So Boom, check them out. Another way to do it, especially if you can't get a credit card, or maybe you've had a bankruptcy and your credit score is really bad, is to get a secured credit card. So this is a credit card that you fund. You put up the collateral. You will send them money, like $500 or $1,000. It's usually a $500 minimum. And then you use that money, which is your money, just like it's credit. And it gets reported to the bureau. So it's a great way to get a credit card and start having these credit lines reported to the bureau. And then after like 3 or 4 months, these secured credit cards give you a path to get a regular credit card. Discover has one, the Discover Secured Credit Card. So you might want to look into that to build credit if you need to. So these are some of the techniques to build credit and put yourself in a position, to buy a home. You want a credit score of about 620 to get a mortgage. And I think if you follow these tips, you'll be able to do that. So that's your real estate market in a minute. Hope you enjoyed it. If you did, remember to like, share, and subscribe.